Hi, this is Afiq, Chief Finance Ninja at Fast Refinance. So in our earlier videos, we spoke about having a goal to invest. We also spoke about having a plan to invest. In today's video, we're going to show you about what you can invest in. There are many asset classes available out there for you to invest in, but we're only going to cover the 4 most relevant ones for the average investor. The first asset class that's available to you are usually cash deposits. A cash deposit is simply the monies you have and you put it with a bank. The bank will hold that money for you, and in return, they'll pay you a small interest rate. Now, depending on where you are in the world, they may pay you from 0.1% per annum to 1.5% per annum for that deposit. The second asset class that may be available to you are bonds or fixed income. A bond, essentially, is an IOU. It can be issued by a government or even a company. What you would do is, you as an investor will buy the bond, and the government or the company will say, okay, we'll hold this money for you for a certain number of years, and every year we'll pay you a dividend or a coupon. They can either pay you monthly, they can pay you half yearly or yearly, depending on the structure of the bond. A bond is effectively the government or a company holding your money, giving you a certain rate every year for the whole period that you're holding, and at the end of it, they'll give you your money back. So the third asset class we're looking at is equities or stocks. Now, simply put, when you buy a stock or an equity, you're effectively buying a part of a company. So what has happened is you're owning part of that company by paying for that share. The historical return on equities are roughly about 8 to 12% per annum, depending on how you do it. Yes, there are some stocks which go up so much, and there are other stocks that go down by a lot more. So that very much depends on how you're investing. When we talk about equities and stocks, we're talking global. The fourth asset class that you may be able to access are mutual funds. Mutual funds are effectively a collective investment buying multiple asset classes. There are many different kinds of mutual funds. There are mutual funds that only deal in equities. There are mutual funds that only deal in bonds. So a mutual fund is essentially a collection of investments. For example, a person buying an equity mutual fund would actually have access to a collection of stocks with his money. Instead of buying each stock individually, his investments are actually exposed to multiple equities. And it's the same for a bond mutual fund. With the same amount of money, he'll get access to multiple kinds of bonds instead of buying just one bond. This translates to lower risk for the investor because your money is spread out among multiple asset classes instead of just one. Something similar to a mutual fund is called an ETF, an exchange traded fund. They work in similar ways to mutual funds, they are just traded on the stock market. So this list is by no means exhaustive. There are so many other asset classes available to you out there. What you want to do is start learning. Invest in yourself first in your education. Using these different asset classes that are available, you can start building your investment portfolio. We'll cover that in another video. This is Afiq, Chief Finance Ninja at Fast Refinance. We'll see you at the next one. If you've liked any of our videos, do tell us in the comments below, and better yet, share it with your friends. If you'd like more tips and tricks, follow us on Instagram, subscribe to our YouTube channel, Fast Free Finance.